Information presented on Sky News Real Estate is general in nature. Viewers should seek their own professional advice before purchasing products or services. Sky News Real Estate may receive a fee for commercial arrangements with companies featured in this programming. This is Sky News Real Estate. Smart investing.
Hello and welcome to Smart Investing. I'm Chris Gray. On tonight's show, are we going to see a property downturn in 2018, or could some areas be going through a real estate boom? What topics are getting too many headlines in the media these days and maybe should be avoided? And as we start a new year, what are some of the options that investors can do to maximise their returns in the year ahead? Well, joining us tonight is Rob Southwell, Managing Partner of Pitcher Partner Accountants and Advisors, and Charles Tarbey, Chairman and Owner of Century 21 Australasia. So, Rob, we've had a lot of focus talking about yield and growth rates, but what are some of the other aspects that investors should be looking at?
I think it's a matter of looking at your overall portfolio. I mean, obviously, your interest rates and looking at your loan portfolios, particularly if you're negatively invested, it's an interesting time for mortgage borrowers at the moment. There's some real opportunities out there, so it shouldn't be just focused on what's my top line headline growth and yield. I think you need to be looking at your overall return together.
Yeah. Now, Charles, when I first came to Australia, kind of late 90s, it was the good old days of if you got $500 a week, the property was worth 500 grand, and real estate was as simple as that. Times do change though, don't they?
It has changed dramatically, and it will get back to that at some stage. It's starting to nudge towards that. I'm starting to see that changing market come in where salaries should go up, rents will come back, prices will come back in some areas, and I think at some point in time they'll get close to meeting, not in Sydney for a very long time, but certainly in other capital cities.
But again, should property investing be as simple as, well, if the rental rate's right, then it's a great investment? There's probably a lot more to it.
It should be, but because so many people were damaged in many of the different cycles we've had, particularly in the last GFC, and then when you look at the heat that was in the marketplace in the last few years, and then the regulators stepped in, and the banks decided they would go opposite to sometimes what the RBA was saying. So you had three different levers, if you like, being pulled at the same time, and not always in the same direction. Everybody was getting nervous. They were throwing investors out a year ago or 6 months ago. Now they're inviting them back in. I really think that we're moving to a very steady marketplace where people who wanted to buy last year will probably get their best chance in the next couple of years.
Now, Rob, obviously interest rates has been a big highlight for kind of the late 2017 and probably into 2018. We've had a lot of lending policies really tightened from APRA that's then pushed out to the banks. Has that actually made a difference? And I think we might have a chart to pull up as well. Yeah,
so if you actually look at the chart up on the screen at the moment, you're looking at the mortgage lending rates, and you can see there that APRA have wanted to get their investing lending, interest-earning loans back to about 30%, and they've gotten there according to the data there. So, and also too, there is you know, a lot happening in the interest rate space. I think we were going to get to this a bit later on, but you know, looking at the mortgage rates there at September last year, you actually come down. If you look at, say, the lower one there, 3-year variable fixed rate, literally sort of 4 months ago, that rate now has come off probably 40 basis points. You're getting, you know, sub 3.9s, sub 3.8s from 4 months ago. So the banks are obviously getting pretty aggressive about getting some credit growth back, and so there is some really good opportunities for property investors there.
Yeah, so we'll try and pull up the other chart of mortgages as well to see if we can get that coming up as well to talk through that. Yep, I think that was the one that
so coming back to the original, so you see there originally, you know, June 15 we were getting up to nearly 45%, which was why APRA was getting pretty scary, and so they've put in this target of 30% for the banks, and they've been very, very tight on their lending policies to bring that back down under control. I think they've gotten to that point. Obviously the credit growth slowed down, and now they're keen to, I guess, get their share of wallet when it comes to investment lending.
Try and get the third one as well as housing credit as well. Which hopefully we'll get up in a second. Charles, if we jump to you in the meantime.
Yeah, I find it really interesting the way in which the banks have been controlling the marketplace as well as the Reserve Bank. So it's not just the Reserve Bank. So the banks have been flexible and making changes to suit themselves. But how quickly they've been able to adjust is what surprised me. Where it was climbing so high with fixed loans and almost in the space of a few months it started to nudge back very, very quickly. So that, to me, is a great indication that there is some control out there when needed.
Yeah, absolutely.
When needed, yes.
So anything from those at all, Rob?
Yeah, so again, that just shows you over the last sort of 18 months, the annual change in housing credit has come down dramatically, which meant I think that's really helped take some of that investor heat out of the market from a growth perspective. But, you know, as Charles was saying, I think it's actually a good thing to make sure that we get a lot more stability in the market as well. So.
Yep. Now, I know we've only had a couple of shows so far this year under the Your Property Empire, and now this new show. Again, sometimes we're talking about similar kind of things, but it does make a difference. Like Tom was saying, for instance, he was seeing a lot of people coming in to register for auctions. The vendors are putting houses on the market. He sees that there's plenty of buyers out there, not in all areas. But do you see that we could be taking off again, or there could be some pretty strong market out there?
The indications are that it's good. The clearance rates, well, there's not many properties, but the clearance rates are still high. I do think that with the stock levels rising, as we'll see in the charts a little later, that to me, along with the fact that the buyers are not as anxious or as keen, I think we'll see a slowing market, particularly in the Sydney basin and particularly in the home unit area. So I don't see it booming along. I do see it being steady and strong, and that's what it should be. But it was not steady and strong in the last few years. It was just crazy, and it was just out of control.
Yeah. Now, similar to Charles having kind of property management and mortgages as well, you guys are into mortgages and financial planning.
Yep.
So again, you're not just seeing purely the accounting side of things, you're seeing the demand. Are people still getting mortgages out there?
They are, but the banks are really, really cracking down. It takes a lot longer to get a loan at the moment. I think if you're if you have a healthy position, then yes, you will still get a loan. It's not like you cannot get the loans, but I think being a good customer with your existing bank is a good thing, but also I think it's probably not such a bad thing to be a potential customer of a different bank, but don't guarantee what's being promised will be delivered, because your clients are getting put through the ringer and dotting every I and crossing every T, and they're also cracking down on why you're borrowing the money. So
they're
previously,
watching very closely.
Yeah, they're watching it very closely.
Even in business, they're calling for more reports and
validity of income.
Correct.
Those
and
things,
they want that on businesses. They want those reports monthly, and they hound you until they get them. So things have changed. They're gone to the days where the sales team ran the bank. It's the credit departments that are running the banks now.
Yeah.
Well, let's maybe jump to that later on. Let's jump into the charts to see what's happening. So these are the first charts of the year. Literally, the market's just opening.
Literally, yeah. 78.2% was the clearance rate for auction, which, you know, about this time last year was pretty much the same, but the number of properties is really, really very, very low. I mean, we're used to the hundreds and hundreds of properties coming up for auction, and you're in the 30s, 40s and 50s in some of the capital cities. Sydney was one of the best performers. It wasn't the best, but from the number of auctions, it had 87.2%, the 87.9%, sorry, but the real outstanding one was Brisbane, but there were only a limited number of properties, but it had 90.9%, but it was just that small number. Melbourne really came in 82.7. It was really the one that always has been shining last year. So overall, clearance rates are still good, but we haven't been tested.
It was the early risers, wasn't it?
Yes, it was, and the limited number of properties. And if you have a limited number of properties and a lot of buyers out there, we should have had 100% clearance rate. Sure. So it's an indication to me that we're probably going to start the year off in the 50s and 60s in clearance rates in most areas. So
probably a good thing to move into the homes advertised for sale, see how many properties are actually going on.
It's been jumping quite a lot. I did a phone around today with some of the guys across Australia, and their stock levels are up. But in the count from CoreLogic are up this week over last week by 4.49%. That's one of the biggest climbs we've ever seen, and you can see it in the chart where it declined prior to Christmas and all of a sudden it's coming back. So that one we've got to watch very closely, because that chart will tell us if you've got lots of buyers but a heap more listings, I think we're in for a real estate market.
And even over Christmas, it's not zero. So it was still kind of reasonable numbers out there.
It was. People were out inquiring, open for inspections. A lot of people coming through. So it's still happening.
And what's happening with the rents out there?
They climbed over Christmas, and they traditionally do, because you've got a whole lot of people moving back and forward. Melbourne had the biggest climb of 3.95% over the previous month, just before Christmas. And interestingly, Darwin had a 2.52%. So, you know, all pretty good. 3.21% increase in rents over every capital city since the market opened. But I expect that to decline, because I think that as the investment apartments come on the market a lot stronger over the next 12 months, there'll be more available, and I think there'll be a lot more negotiating going on.
Wonderful. And then finally, the vacancy rates.
Still fantastic in Melbourne, 0.85%.
Wow.
Sydney 2.04 and Perth 7.74. So those three, 3.54%, I think, when they add the three together and divide it by three, something like that. But Perth is steady, which I'm really happy about. Melbourne's still very low.
Wonderful. Okay, well, Rob, so an interesting start to the year. What opportunities do you think there are out for property investors out there? Or is there any opportunity?
Well, I think, you know, as I mentioned earlier, I think looking at some of your costs, so I think it's a great time to consider revising your your borrowing facilities. As I said, there's some great opportunities for investment loans out there at the moment, so go and push your bank a bit harder if you're a good customer. But also I think it's good to get to keep in touch with the market. So I occasionally go out and have a look around and see what the market's doing in your local areas, because I think you need to be on the ground and see what's going on as well. So get away from the speculation, because the market drops one month and the headlines are, oh, the market's crashing, and I think you probably need to go out there and do your own research.
We have the spruikers out already calling the market crash in Australia. Already started. Yep, the seminars all up and down the East Coast.
Back with you,
every year, I think 5 years in a row. See how it goes.
Wonderful. Yeah. Good to see you as always, Charles.
Thank you, Chris.
And we're going to be back in just a minute with Tom Panos as well as Rob with some more tips and ideas on property.